Tremolo Manufacturing has 3 employees who work on an hourly basis and are paid bi-weekly. The current CPP rate is 5.1%, and the current EIA rate is 1.62%. The appropriate income tax rate is 18%. Each employee contributes a portion of the pay to the United Way, and the employee pays the entire amount of healthcare premium for the employees. Assume the employer contributes 100% for CPP and 140% for EI. Payroll information for the week ending August 23rd, 2019 is listed below. So the first step is to calculate gross and net pay for each employee, and we're rounding all answers to 2 decimals. So the first component then is to calculate their gross pay. So in this situation, we need to look at the hours for each person times the rate of pay to determine the fact that singing has a gross pay of $1,000, rock and roll has a gross pay of $10.92, and hip hop has a gross pay of $10.12 and 50 cents. So our total gross pay in this question or this problem is $3,104.50. The next part says to calculate income tax. So for income tax being 18% of gross pay, I've entered a formula here to round to 2 decimal places to equals 18% of the gross pay. So equals the 1,000 times 0.18 rounded to 2 decimals. CPP, this is where it's important to make sure we account properly for the $3,500 exemption. In this situation, we're told they're paid on a biweekly basis. So what we do is we take the annual CPP exemption of $3,500 divided by 26 pays in a year because they're paid biweekly, 52 weeks in a year divided by every 2 weeks is 26 pay cycles, creates a CPP exemption amount of $134.62. In order to calculate our CPP, we would take the gross pay of $1,000 less the exemption, so the first $134.62 is not applied, so it equals 1,000, take away $134.62 times the rate of 5.1%. In singing's case, it would equal $44.13. Total CPP for this organization should be $137.73 for the employee deduction amounts. We then move over to employment insurance. We're told the rate is 1.62%, which is a calculation on their gross pay. Again, we're rounding to 2 decimals. So 1,000 times 1.62 is 1620, etc. Equaling a total amount of deductions of $50.29. United Way, we're given the actual dollars that the employees are deducting, which totals 16 across the 3 employees. Therefore, we have total deductions for each of the employees as indicated by this table. Once we've identified the total deductions, we can calculate the net pay being $2,341.67. Yes, I fixed all the rounding here. The answer document is posted online, has some rounding issues for a penny. The next item it says is to calculate the employer contributions. So I've just added a little table on the right-hand side here for the employee's cost. So CPP is a 1-to-1 ratio. So whatever the employees pay, we pay, totaling $137.73. Employment insurance is a 40% markup. It's 140% of whatever the employee's deductions are. So we take 1.4 times the EI amount per employee. So I'm totaling across all 3 employees $70.41. And the last part is we're told that the employer is paying the healthcare premiums, which total $51 across the 3 employees. The next part of this problem says to prepare the journal entries for August 23rd, 2019. First part is to debit our salaries and wages expense for $3,104.50. And then we have the various credits for the payables, being income tax $558.81, CPP of $137.73, EI of $50.29, United Way payable of $16, and then our net pay being $2,341.67 as a credit to the payable account. The next part of the journal is to record the employee benefits expense, which has the CPP payable credit of $137.73, EI payable credit $70.41, and a healthcare payable credit of $51. The sum of which, being $208.14, is an employee benefits expense for this organization. The next part of the problem says to prepare the journal entries to pay the employees on August 30th. So in this case, we've already set up the liability in the first journal. So we will debit the liability for $2,341.67 and then a credit to cash because we've actually sent the money to our employees. The next part asks us to prepare the journal entries to pay United Way and the health insurance on August 31st. So in this situation, we're paying our United Way payable. So it's a debit to United Way payable for 16, a credit to cash, and a debit to healthcare payable for 51 and a credit to cash, which balances to our earlier entry posted on August 23rd. The last part says to prepare the journal entries to pay CRA liabilities on September 15th, 2019. The liability amounts owing for CPP, for example, would be the CPP from our employees, plus the CPP that we had to match. So total debit to CPP payable, $275.46. EI payable, again, you add the two components to total $120.70. And then income tax payable being the employees' deductions only of $558.81 for a total amount owing to CRA and sent to CRA on September 15th of $954.97.